US dollar index strength above 98 shows traders favoring hawkish Fed guidance over weaker GDP data. That is the unusual part. Soft growth normally hurts a currency, but policy language kept the dollar supported. The index moved from a 97.8 low to a 98.2 session high before settling near 98.1. For crypto, the dollar matters because a stronger dollar and higher yields can tighten liquidity across speculative assets. The immediate pressure is that the dollar is being supported by hawkish Fed guidance. The reason this deserves attention is that the dollar can tighten liquidity across risk assets. Read the event through this lens. DXY held above 98 despite weaker US growth data. The confirmed baseline is a modest DXY gain after a hawkish Fed pause. First quarter GDP growth came in at 1.3% annualized, below a 1.6% forecast. Consumer spending moderated and business investment declined, yet the dollar held firm. The market focus shifted from weak output toward the Fed's signal that rates may stay elevated while inflation remains a concern. Those facts put DXY moved from 97.8 to 98.2 intraday. Beside consumer spending and business investment weakened, that baseline keeps the segment grounded before the mechanism takes over. The factual floor is the dollar rose while growth data disappointed. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is the rate differential channel. If traders believe the Fed will keep policy tighter for longer, dollar demand can rise even when growth data disappoints. In plain English, the market paid more attention to the return on holding dollars than to the slower GDP number. US dollar index matters here because a sustained hold above 98 can pressure commodities, emerging market currencies, and risk appetite. The operating detail is that Treasury yields can reinforce the dollar. While soft GDP matters less if policy stays tight, that is the part viewers need before judging the headline. The mechanism stays concrete because higher for longer rate expectations support dollar demand. The affected side is global capital allocation. A firmer dollar can make dollar-priced commodities more expensive for foreign buyers and can weigh on markets that rely on easy liquidity. For crypto, that does not create a single price rule, but it adds a macro headwind when traders are already watching yields. The current level is also technical. 98.5 is treated as a possible upside signal, while a failure at 98 could invite selling. The practical effect lands on crypto and global markets because commodities can face pressure from dollar strength. The secondary read is that emerging market currencies can feel strain. The effect is not abstract. Crypto and global markets face a firmer dollar liquidity backdrop. The unresolved part is whether the dollar can stay strong if economic data keeps weakening. The Fed pause supports the dollar now, but a sharper growth slowdown could eventually change the policy message. Inflation data, employment reports, and Fed minutes will clarify whether the hawkish tone remains credible. A move above 98 should not be treated as proof that the dollar trend is permanent. The clean split is that the 98 hold is confirmed. While durability of dollar strength still needs evidence, the unsupported leap would be this: one move does not prove a lasting trend. The clarification needed is inflation and jobs data will test the Fed tone. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is whether DXY holds 98 and tests the 98.5 area. For US dollar index, inflation and jobs data will decide whether the Fed's higher for longer message still dominates weak growth. If the index loses 98, the market may start pricing the GDP weakness more heavily. The dollar is being driven by policy credibility first and growth concerns second. The decisive test is watch 98.5 and Fed minutes. That matters because those signals show whether strength extends. The next stage should be judged by DXY hold above 98, not by guesses.